Hello, everybody. Welcome to the Fundamental Analysis webinar with AvaTrade. My name is Troy. I'll be presenting. As we get going, keep in mind there's always risk involved with trading. No one trade is guaranteed to profit. I think we all understand that. So, in some way, you should be managing risk in a way that makes sense for you, whether that's using stop loss marks, hedge positions prepared in some manner. Keep an eye on your trade sizes and your exposures so that you can work out your trading plan without undue risk. We do have a special feature in that regard called Ava Protect on our award-winning mobile app, AvaTrade Go, and also on our web trader platform. You'll find Ava Protect available when you open trades through those platforms or through the mobile app. You'll see that when the trades show up on your MT4 and MT5, that they have protection when you view the trades through the web trader and mobile app. So it's a nice feature for a small premium cost. You can manage, protect against all risk for defined time periods. So it's something you might check out. Now, the other end of that is, although there's risk on each and every trade, there's also a nice potential for profit on each and every trade, which is why we're here. We're going to cover from an educational perspective, not to be taken as financial advisement, but from an educational perspective, some ideas and strategies that entail some fundamental strategies along with the technicals to work out some ideas on the live charts today and ideas that you could use moving forward to hopefully find some trades that you're interested in to enter in on and find appropriate entry points and exit points for you. So real quick, I know we get a mix of new traders and also experienced traders in the webinars. So excuse me if you've seen this before, but we'll take a minute to talk about fundamental analysis, and then we'll move on to today's news and the live charts. So fundamental analysis, what is it? It's basically looking at the headlines, the breaking news, the economic events such as CPI numbers that came out today, GDP numbers, and that sort of thing. Those are what we call regular economic events that we know exactly what they'll be, when they'll be, for what country they're for, etc. And you find those on any economic schedule, and we'll take a look at one today. And then also there are other types of extraordinary economic events that are not scheduled, that you don't know what the headline will be or when it will come. There was a good one today we'll take a look at in terms of extraordinary news. It was dealing with Johnson & Johnson's vaccine and a negative headline about that. I think maybe a little overdone, but it certainly caused a market move. So we'll take a look at some extraordinary economic news as well, and then we'll jump on the live charts once we get a feel for which way is the wind blowing. I have someone saying that they can't hear. Let me just type. It's just them. Okay, if anyone else is having problem with audio, let me know, but I think it's just the one person. Okay, so please ask questions as we go along. Give input. If you have something you want to share, feel free. Now, this is our web trader platform, and you access it from our main website. And the web trader trades on top of the MT4, MT5 accounts. You can switch between them from within the web trader. You log in here to get to that platform. And it has those risk management features I was talking about in terms of Ava Protect. The order window also calculates your exposures for you, your potential profit, your margin requirements. So it's a very nice system. And you also have all of those features on our mobile app, AvaTrade Go, which you find here. Go to trading platforms, go to AvaTrade Go, and there's the download from whichever app store for your operating system. You can get the app, and it also has, as you see, Ava Protect, protection against losses for small premium cost for defined time periods. If you program take profit, stop loss, it calculates things for you in terms of exposure, potential profit, etc. I've got a second person saying they're having some audio issues, so let me check real quick. Type OK if you're hearing me clearly still, or if you have a problem, let me know. Okay, looks like pretty much everyone's okay with the audio. Sarathi, if you've got to go, I apologize. You have to check your audio setup on your side, okay? Everything's running smoothly for everybody else. Okay, so real quick, what's the fundamental news? Since that's what the webinar title is, right? And honestly, in every webinar, we're looking at fundamental and technical because they go together. You don't trade without both, honestly. So if we take a look, we're looking at the fundamental news. Wall Street opens mixed as Johnson & Johnson shock dense reopening trades, Dow down 150 points. That was earlier in the day, okay? Whether the Dow is still down 150 points, it could be. We see the futures are down 176 actually, so a little bit more than that. The S&P 500 managed to recover after its large drop, but simple pending order kicked in for many traders and has worked very well for unexpected moves caused by headlines like this. A sell stop set below the support level that was established on the major indices, boom, paid very well today when that headline broke. And you can always have those trip lines set in the market with pending orders, just waiting for a support level to break or a resistance level, and boom, you get in on that big move from an unexpected headline like this one. Okay, markets were afraid that, hey, if one of these vaccines is being suspended, maybe that's bad for the economy reopening. And so there was an instant knee-jerk reaction. And so there's another headline on Reuters about the same thing. Consumer prices came in out of the U.S. And they were very, very good out of the U.S. And so that caused some rebound effect after the market had pushed down after the vaccine headline. Up went the market again, back up. I'm talking, when I say market, I'm talking about the stocks, I'm talking about oil. Some of the commodities went up, etc. So that was positive momentum back after the negative headline came in. If we look at the economic schedule, this was the type of economic information that I said was, the type of fundamental news that's regular economic information. You can see there was mixed news all day. GDP numbers bad out of Great Britain. Industrial production numbers better than expected out of Great Britain. Then trade balance worse than expected out of Great Britain. Then we're looking European Union, same idea, a mix of better than expected and worse than expected headlines. And then out of the US, nothing but good news. The numbers were stellar. CPI numbers, which is Consumer Pricing Index, so it shows some inflation coming in, the economy doing strong, prices up a bit from demand, which is a sign of a strong economy. Obviously, that's fueled by trillions in stimulus that have been handed out, so it's kind of an artificial surge in the economy, but nonetheless, those are good numbers that came in out of the U.S. without any negative numbers coming in. Some poor numbers for trade balance out of China, the latest numbers that came in. So kind of a mixed bag out of the UK and EU, and pretty much all good economic numbers out of the US. If we then look at the EU a little closer, we've got the Parliament partly clearing a path for a UK trade deal. So that's good news. So more optimism on the markets. And then you have this, which it's nothing yet, but it could be something. Russia is maybe having a military buildup near Ukraine, and they say they're not going to listen to the US's call to stop it. And so if you remember a while back, Biden called Putin a killer, and Putin responded and challenged him to a live debate, which Putin obviously thinks Biden couldn't handle without cue cards what to say. And so Biden ignored his offer for a live debate, but they're not getting along so well since Biden came into office, and it looks like Putin maybe is looking to test the U.S.'s resolve now that there's a new administration making the decisions in the U.S. And we've actually seen some of the same out of China with Taiwan, with larger than recent flyovers, larger flyovers than they have done in the recent past, with numbers of military personnel flying over Taiwan and challenging U.S. warnings to not do that. And so we've got Russia and China both, you know, I guess you could say competitors of the U.S. challenging U.S. resolve to see, you know, will the U.S. try and stop them from doing these things? And so that, you know, that nothing like potential for war. Not saying there is, but if things escalated, that could cause the market to push down. And so something to keep an eye on. It's not a big deal yet, but it's something to keep an eye on. If these tensions between U.S. and Russia and China and the U.S. Escalate, you certainly need to keep an eye on those headlines with the equities, the stocks, the indices, and those sorts of instruments. Now, if we jump into the web trader, which again you access from this login on our main website, if you log into the web trader platform, and for those of you who've been with AvaTrade for some time, you might not have the web trader active on your account. If that's true, just contact our support, say you'd like the web trader initiated, and it trades right on top of your MT4, MT5 accounts. What the reason you might want it is some of the things I've already mentioned, and by the way, just for simplicity, you know, the MT4, MT5 doesn't have a search function. I can pull up any instrument if I spell it right, and there it is. So and anything you search for, you can pull up just by clicking on it, and it's at the top of your list. You can add it to your favorites list by clicking the star, and then if you go to your favorites, it'll be in that list. Very simple to navigate and use on this platform. So what I wanted to show you, if you were trading on something that offers AvaProtect, which gold has AvaProtect on it, silver does, and all of the FX pairings, by opening your trades through this platform, you can add that protection. So maybe you say, okay, the stimulus in the US, there could be more coming out. Maybe, you know, the FOMC folks are talking now, actually, in the US. If they're talking about still propping up the economy, more stimulus coming, then maybe you think, okay, gold could go rushing up as a anti-inflationary safe haven. And we saw, you know, consumer pricing index numbers hit a multi-year high. So if prices are rising, that's a sign of inflation. Maybe that drives gold up, which actually it already did. Gold took a spike up when those numbers came out. And, you know, if you think gold could rise further because of the fundamentals, then maybe you're setting up a trade and, you know, you put your typical stop loss distance. Maybe you think, okay, I'll put it $50 down in the price of gold and put my stop loss maybe, you know, just below 1700, maybe 1695. And then I take a look and I say, wow, I'm risking over 500 out of, you know, less than, let's say it's 2000. It's, we're looking at more than 25% of my balance in one move. And maybe I say I don't want to risk that much, but I think in the next couple of days maybe gold could go flying, right? If that's the scenario. And if that was the case, then I might say, instead of risking a quarter of my account, if I believe a large movement is due in the next couple of days, then I could do AvaProtect. I can protect by the hour or by the day. And so for 2 days protection with 10 ounces, I only need what, $8 rise in per ounce on gold, and I make back the cost of the protection. And if gold bombs $100 an ounce the wrong way, I don't lose anything during this 2 days because I'm protected for, in this case, $80.50. So if I think my take profit could be, you know, up at 1800, right? Then if I put 1800 for my take profit and I have the potential to make $536 or $538, and I'm only risking $80 for that 2 days, then great. Maybe that's a no-brainer move for me to go ahead and pay for that protection. Okay, so type OK if you're with me on that, how this feature works, AvaProtect. It's any losses during the covered time period are added back when either when the trade closes within that time period or when the protection ends. And if you make a big profit, it's all yours. Especially during volatile times, it's a nice tool to potentially work into your trading strategy. Just a quick okay in the chat box if you're with me so far. It's kind of a test too to make sure everyone is okay with the audio still. I had a couple people complaining about the audio. All right, great. I've got enough responses. Looks like we're still up and running fine. All right, so risk management then done for you before you place the trade. You know your risk, your potential profit. You have extra protection features that you don't find anyplace else, except within the AvaTrade Go mobile app and within this web trader platform. Okay. Now, fundamental analysis, since we're talking about it, there are all kinds of special features in this platform. So if you go to the Trading Central feature, which is available on all live accounts, you can pull up the economic calendar, just like the one we looked at from the website. You can pull up live technical analysis signals done for you, technical analysis on cryptocurrencies, on regular FX. You've got all the breakdown of support, resistance, the direction of the expected breakout move, timestamped through the day. Okay, coming in free for you. Usually signals cost money. You have them free on all live accounts with this Trading Central feature. And then Market Buzz gives you the fundamental analysis articles as they come in throughout the day. It's searching the internet through all kinds of sources to bring up information. And so the most trending ones is Morgan Stanley right now. It's the biggest bubble. If I click on it, I get the most recent articles. And so I can read what's going on with information that involves Morgan Stanley. And real quick, you can find information, decide to buy or sell on something. Natalie, good question. MT4 and MT5 are two different types of trading accounts. They're 99.9% the same. MT5 is a newer version of the MT4 platform. You can trade on both with AvaTrade. So AvaTrade is the broker. MT4 and MT5 are just softwares for trading on with AvaTrade. And you also can trade through the web trader or through AvaTrade Go mobile app on top of the MT4, MT5. Okay, so the web trader and the AvaTrade Go mobile app are just user interfaces that are more user friendly with special features that trade right on top of your MT4 and MT5 trading accounts. And for that matter, we also have an options trading platform, Ava Options. It's something you could check out as well. We've got videos on our YouTube channel for how to trade options as well. It's a different style of trading. It's not the focus of this webinar, but we do offer that also. We've got a variety of platforms available. And so let's take a look at the live movements now, and we'll look on the MT4 account at this point and see what's happening with the markets, what's happening with the movements. And if we look at, say, the Great Britain pound, we'll see there's been a lot of movement today. So the pound was up here as a high at this resistance level, and it came crashing down earlier today after, remember I showed you those economic announcements out of the UK. The first ones that came in were really bad, and then the next ones were better. So the really bad announcements came in and down came the pound, okay? The better announcements came in and the pound recovered back up. Okay, now it's kind of in the middle, stuck in the middle on the movement, which isn't necessarily the best place to try and trade from, but that's where we are. So we can see why this moved. We can also see why it's stuck in the middle. We've got mixed news out of Great Britain. Some good news, some bad news. Fundamentally, not the easiest thing to trade on. So let's move to something different. But at least we understand why those movements occurred. If we go to something like the US 500, now that's maybe a better entry point, because what are we looking at here? We're looking at all-time highs on the S&P 500, just right here, just a stone throws up, all-time highs. And we had some news about this vaccine maybe not being able to be used from Johnson & Johnson. Now, there are other vaccines, right? So there are still vaccines to be used to help economies open up to vaccinate populations. But in general, that wasn't the greatest news. And we've got FOMC members speaking right now, and the movement did not break the all-time high. It had trouble. So whatever they're saying, I'm not listening to it now, but I can see the movement on the candles, and I can say, okay, it didn't break the all-time high. So I might say based on the mixed news fundamentals today, some bad, some good, maybe I expect support and resistance levels to hold. And what's better than a resistance level that's an all-time high? So maybe I say, okay, let me take a sell for whatever trade size makes sense for your account. Okay, take a sell position if you believe the markets should drop. So if I'm going to do, I don't know, a couple of lots, because this is a demo account with a pretty large balance, and I'm selling on S&P 500, then I put my stop loss. Just click on your entry price and you can click and drag, and that creates your stop loss line and your take profit line. So I can drag above the all-time high on the S&P 500. What a great place to have a stop loss, and it's not far away. So could we lose? Of course we could lose. So the stop loss is at a reasonable distance away for the trade size and the balance that you have, the stuff we talked about already. So take a trade size that makes sense. You only make the trade if you agree with the fundamental news situation and the technicals. The fundamental news on this is, okay, there was a huge scare earlier. The S&P 500 dropped. Look at this drop. This was today. This huge drop. You know, if you had a pending order below this support level down here, okay, this was a major support level. Once it broke, you'd have triggered a sell stop pending order, and down it went further. Okay, so that's the idea of pending orders getting in. Even if you didn't know that headline was coming about Johnson & Johnson's vaccine, nobody knew that headline was coming. If you had a pending sell stop here, a pending order below this support level, just waiting to say, okay, if it breaks below that price, then there must have been bad news. Knowing there were FOMC committee talks going on today, maybe that would have been the reason you put a pending order below this support level. But it broke the support, and look, that's a typical breakthrough candle. Okay, when a support level gets broken, it takes momentum, and once it broke, it plunged. Okay, predictably. Then you could have had a pending order back up here, knowing, okay, the FOMC committee didn't talk yet, these members didn't do their speeches yet, and so I have a buy stop pending order up here. When it came up and broke back above that support level, look at the breakthrough candle back up, the momentum. So understanding the fundamental news today, coming into the day, you could have said, okay, I understand that there's a potential for large movement. There were a lot of large scheduled announcements today. And so that's enough to say, okay, let me set up pending orders below support levels or above resistance levels to trigger trades if those price levels break, knowing that there's potential for big news. And if that big news goes the wrong way for the market, it could break the support, which is what happened. Now, it happened not for the reason maybe you would have thought in advance, but it happened because of an unexpected headline, the other type of fundamental news that you can prepare for with pending orders, as we're describing. And so now the situation is we already established a low point for the day, right? Down here, the bottom of this wick, all the way down here, that's the low point today. The markets already got spooked enough to drop that far earlier today. So now you say, okay, I've got a low of the day here, and I've got a high of the day here, which happens to be an all-time high. So now you say, okay, there was enough fear to drop the market that low. These FOMC members have been speaking today, and we haven't broken the all-time high yet. Even with all that good economic news out of the US, the all-time high hasn't been broken. It tested the all-time high, but didn't break it. And now it's near the all-time high. So fundamentally, it makes sense that, okay, maybe we're going to trend between this low and this high. And if that's the case, then the technical analysis makes sense. Sell from just below the all-time high. If it breaks it, okay, small risk, percentage-wise on your balance. If you take the appropriate trade size, it's a small risk. On a demo balance of 102,000, if I lose 1,000, it's less than 1%. And my potential profit down, if I'm putting my take profit down here, somewhere, let's say even halfway to how low it got today, to this support level here, okay, the first support level, my potential profit is about double or triple what I'm risking, right? At least double what I'm risking. And so someone's complaining of audio problems, so I paused just to check that my headset is plugged in properly. But that's the setup. Using the technical analysis to see if it's an opportunistic spot to enter, going with what you believe the fundamental news is, which is mixed news today, some good, some bad, and in which case maybe you expect trending, or I'm sorry, ranging. Ranging is when it goes up and down between 2 points. Ranging, between a range of a high point and a low point. Okay, and so far that's what it's done today. High point down, low point up, high point down, and so we're near the high point that it hasn't broken. Perhaps it will range back down with the mixed news that we've looked at today, the mixed fundamental news. And so that's what I view on the S&P 500. You could have the same view on something like the Dow Jones. Look how far down the Dow Jones already crashed. That could be maybe a clue as to what the S&P 500 could do. The Dow Jones is down a ton right now. It crashed down and didn't make it back up. So there's obviously some fear on the market, and maybe that's playing into the fact as to why the S&P 500 hasn't broken the all-time high today. Okay, doesn't mean it won't, but it hasn't yet. And we could compare that to the FTSE, which is flat. Again, mixed news. I don't like trading on this. There's not enough price action, right? Look how tight that movement is. It's like a tight snake sideways. The price action looks much better here for going after large movements, larger potential profits. Okay, and it makes sense because the biggest news was out of the U.S., wasn't out of European Union, etc. So that's what we're looking at. Here's the FTSE and the CAC. The CAC had some movement, huge gap down and then sideways this week, and looks like an uptrend. And we could look at the DAX. Okay, this is ranging nicely too. This could be a nice ranging trade. Here's a support level on the 15-minute candles, and here's a resistance area up here. So we're near the bottom end of the support. So to buy on this as it's bouncing off the support could be a nice move with a stop loss just below the support level. Okay, and that could act as a natural hedge to the sell on the S&P 500. Okay, so that's a potential opportunity there as well. Trading ranging movements with mixed fundamental news. It makes sense. Now let's look at gold. Why would gold go racing up today? After this, gold went racing up. It was dropping today. And when the US CPI numbers came out, Consumer Pricing Index showed an increase in pricing greater than expected. What does that mean? That means inflation, right? Is it healthy inflation? Is it too big of inflation? Regardless, it's inflation. Prices went up more than expected, the pricing index. And if that's the case, what's the number one safe haven against inflation? You get rid of your dollars, you sell them, and you buy gold. That's what happens. And so gold is the number one inflationary safe haven, and up went gold when those CPI numbers showed higher pricing than expected. And so, and with the stimulus, more stimulus potentially coming in the US, not a surprise that gold went racing up. Again, knowing those CPI numbers were coming, you could have had a pending order at this resistance level, resistance, knowing, okay, CPI numbers come out, have a buy stop pending order above this resistance level to buy if it breaks through. Here's the breakthrough candle, just like the breakthrough candles we saw in the S&P 500. Here's the breakthrough candle, and you'd say, well, why would I buy after it already went up? And the answer is because it broke this resistance level right here. Resistance, it breaks through, that establishes momentum, and up it went. So even if you didn't buy until it broke the resistance level, if you had a pending order right here, what a nice move. You'd have made money just as easy on the way up with gold as you could have on the way down with the S&P 500 with simple pending orders, knowing that there was big fundamental news coming. Set your pending orders on the opposite side of resistance or support levels, and in this case it breaks the resistance, you get in on a buy stop, and up it went. So pairing days where you know there's big news coming and you don't know what the news will be necessarily, but there's big news coming, prepare your pending orders, buy stop, sell stop on the upside of resistance levels or downside of support levels, and whichever way the news is, if it's big enough, you get breakthrough candles. There's the breakthrough candle, boom, buy stop would have been triggered, up it went, it consolidates up here, now you take your profit. These are scalping strategies. Strategies for short-term trading, taking advantage of the fundamental news as it comes in with pending orders, or you trade after the fact with what you know now. Okay. And gold could potentially keep climbing as a safe haven. I don't see resistance on gold. Let me get rid of all these lines I drew. We'll delete all these lines to clear up the screen. And with gold, we're looking at resistance up here on the 4-hour candles. We're talking 1757 is the resistance level. We're at 1746 now. And so it already broke with this wick above the current resistance. So if you're looking at gold and you're bullish on gold, you could say, well, if gold breaks this resistance level here, if it breaks above this line, the next resistance level we just saw was up at 1757. So even though gold's already gone up a ton, a buy stop pending order up here, if gold breaks this price level, the next major resistance level is up another almost $10 an ounce. Okay, so it doesn't mean gold is done climbing. Now, if you're a purely technical trader, you could say, okay, I understand the fundamentals as to why gold went up. Purely technical traders would say, but this is a resistance level and I can sell on gold, not 2 lots, that's 200 ounces, unless you have a large balance. Pick a trade size that makes sense for you, okay, whether it's 5 ounces or 25 ounces, whatever it is. And if you're selling on a technical basis, you say, okay, there's resistance here. I see it pushed down once. I'm going to put my stop loss here. I only have to risk a little bit. And if gold goes racing back down, I can take profit with much larger potential profit down to a support level somewhere down here where it established support and bounced. So this is a purely technical move. It's not based on fundamentals. Fundamentals say gold should keep rising. So sometimes if the technical entry point is nice enough, you might choose to trade against the fundamentals. I think this might go up and break the resistance. I'm just giving you an example of trading on a technical basis, which would be selling from a resistance and waiting for it to go down. Okay. I in general don't like to trade against the fundamental news. I would prefer to say, okay, if I think it's going to come down, then I'll put a pending order to buy from down here, a buy limit pending order, because I think the fundamentals say gold maybe should climb. So I'll just wait and see if it is going to pull back. I prefer to buy from the support rather than sell from the resistance, because the fundamental news says maybe it'll break the resistance. Okay, and that's the idea of using fundamental news to have a preferred direction. Even though the technicals say maybe sell, the fundamentals could tell you, nah, I prefer to buy. I'll wait for a better entry point to buy in this case, as an example. Okay. Any questions as we're going along, or if someone wants to request an instrument to look at, by all means, give me a suggestion. We've got enough time to look at another instrument. Sure, we can look at oil. Let's take a look at crude oil, and then maybe we'll call it a night. Some interesting movement on crude oil today. We're looking at a resistance level up here that was challenged but not reached. Okay, we see the resistance from earlier in the week. Gold hit 60.74 approximately, and then came down. Now today it was testing, did not get up to that price and pulled back down. It's sort of a mixed movement. Oil came down with the vaccine news, just like the S&P 500 and indices pulled down. With that vaccine news, oil pulled down, but it since bounced back up and now it's kind of bouncing around sideways. This is one of those movements that we say, okay, it's ranging. It's ranging, and it's a tight range. It's ranging between 60.45 and 59.95. So about 50 cents range. It's ranging about 50 cents. And so With that type of range, I probably don't want to trade from the middle of the range. If I expect that this is going to continue to range, I would put a pending order to buy if it gets near the support, and I would put a pending order to sell if it gets near the resistance, with a short stop loss on the sell to the upside of the resistance and a short stop loss on the buy to the downside of the support. Because the news is not so strong one way or another today for oil demand, to take a trade from not an optimal entry point might be a tough move to do. Nasdaq is more driven by the tech stocks. Good question. We look at the S&P 500. Looked like maybe it was ready to test the all-time high and then potentially push down. So as we can see on my open trade, it's still testing the all-time high. I can see from what it's showing here. And again, the trade size makes it deceiving. Looks like it's down by a lot, but it's a larger trade size because it's on a large demo balance, a couple lot position. This is a small fraction of 1%, a third of a percent or even less that it's down right now. So it's just testing that resistance level. It didn't break it yet. And so we're looking at the S&Ps. Will it pull back down in the ranging movement it's been doing today? The Nasdaq is the same thing, right? Nasdaq is testing the all-time highs. It's driven more by the tech stocks. That, you know, the tech stocks are less affected by the vaccine news. Why? The tech stocks did well during the pandemic. Think about it. You know, everyone started using Zoom and Facebook and social media and social business apps. They all did very well and even better during the pandemic than they did prior. So the bad news about Johnson & Johnson's vaccine, while the S&P 500 and the Dow dropped, not so much for the Nasdaq. Nasdaq's doing great and is also testing the all-time high, but without the big drop. Nasdaq really didn't have as big of a drop today with that bad news about the vaccine. So it's interesting. If you're a technical trader, you sell on Nasdaq right now, and fundamentally, maybe you sell on Nasdaq also at an all-time high. Okay, it's bouncing down off the all-time high as well right now. You see the wick. Okay, so if I'm selling on Nasdaq, fundamentally, I see ranging movements today. I put my stop loss above the all-time high. I put my take profit at the first support level, somewhere right down here. Okay, we see support here. Then it broke through, and then support again here and back up. So risking very little to make a larger potential profit. Okay, but certainly this has not started the downtrend yet. Okay, Natalie, maybe in the next webinar, we're doing this week instead of Thursday. Our next webinar is tomorrow. Okay, I'll be out of the office on Thursday, so we'll have an afternoon webinar tomorrow. We'll focus a bit more on currencies maybe in tomorrow's webinar, and I think we'll call it quits here today. So have a look at these indices. I think you may find that some of these movements may try to have a pullback eventually. I think after breaking the all-time high or testing it more, you may see a pullback. So have a look. If you like the entry points, go after it. And certainly you'll see some movement on the currencies too, with all the news out of Great Britain, European Union, and the US. All right, everybody, thanks for joining. Good luck with your trading. And till the next webinar, test out some strategies. Let me know how you do.